How's it going, guys? This is Forensic Forex with Deontay, and I'm back with another video. This is your daily update on Australian dollar versus the US dollar. And as we can see, price gave us another down day, which was expected because it was above Sunday's opening price. It was in a premium. However, we still haven't broken this swing low. If price were to get down to this swing low, then I would take off my buyer's cap and then look to put on my seller's cap after. However, this is the first week of the month. Normally the first week is going to be a seek and destroy. It's NFP week. I don't like to trade the first week. I normally trade the following week. This could come up, come down, and then go back up. Just like that. That's what could happen. That's one scenario that I think price can unfold. Or price is coming up, coming down, up, and then continue going down. That is another scenario. I'm favoring, if price were to continue going lower, I want this to be a false break, then run higher. That's what I'm speculating. False break. If it comes any lower, takes out any of these swing lows, the 20-day low here, false break, just to get price to go higher. Just like how we saw it with GU last month. GU came down and then ran back up for the entire month of March. Now looking at it from the weekly perspective, if you look at it here, as always, Sunday to Friday, look at the idea here. Where is price selling from today and Thursday? Above midnight opening price. Look at how the New York session pulls it back up and drops it. If you're in the chat or in the channel, I've been doing these polls every day just to get you stimulated, get your brain thinking about how the market works. I asked a quiz. Last quiz was, if you had to sell on any given day, where would you sell? You're most likely going to sell above midnight opening price for the day. And you can see here, the best sell opportunity was above this line here. That's when it's expensive for the day. The algorithm resets its overbought and oversold conditions every single day at 12 a.m. That's the line in the sand. You don't need any indicators to tell you when price is overbought and oversold. As soon as it gets above this line, it's overbought. As soon as it gets below this line, it's oversold. You can see they sold in an oversold condition in a premium above the line. Sells off. In confluence to what? Being above the opening price for the weekly range. And you can see the New York session comes up, takes out a 15-minute swing low. Sorry, swing high right here. 1, 2, 3. Takes it out. Even takes out this one here up here. Zoom in for those that can't see. I know I can't see that. Here. Takes it out. Takes this one out as well. And what happens after that? Reaction down. If we go in the lower time frame, odds are we're going to see a fingerprint by the market makers. That's that candle or that wick that takes out those swing highs. What happens after taking out that swing high? The market makers print a fair value. A fair value gap. Let me draw it properly. Here to here. There it is. Price trades into it one time. Dynamic reaction. Bodies really respect it and it trades away. And where is this happening? It's happening all in a premium for the weekly range. This one doesn't happen above midnight opening price. Midnight opening price is here. This line here. This is Sunday's opening price. It's still overbought for the week. You can see the reaction here. Price trades into it, runs right back into a discount. So being in a premium for the range, running back down into a discount for the range. And now it's cheap again. So if you go back to the hourly chart and you look at it, it's cheap once again down here. And you can see probably London close is probably a small reversal pushing back up because it's in a discount. So there's a small probably scalping buy opportunity here for London close. And maybe even throughout the rest of the day, it may consolidate and slowly trend back up to the weekly open. But be advised, tomorrow is NFP and unemployment numbers. Don't chase these numbers. I'm telling you, a lot of people think that these numbers mean everything in the world. They don't. Because the numbers can come out positive and the market can drop. The numbers can come out negative and the market can rally. How does that make sense? Because it doesn't make sense. It doesn't. The market makers are using it to entice the public eye. They're trying to entice the sheeps of the market. Come to the table. Look, I have something to share with you. It's the data that's coming out. And then the data drops and the market moves in their intended direction. And then you're bamboozled and you're sitting there like, wait, what? I thought the numbers were negative. The market should be dropping out of the sky. Oh, I thought the numbers were positive. It should be shooting to the sky. No. It's chasing liquidity. It's following its higher time frame trend. It's following what objective it needs to get to. That's what's occurring. And you can see all of that using the weekly open and midnight opening price. So if the news drops tomorrow, right? If the news drops tomorrow, while the news drops tomorrow, look at where price is right before the news drops. Is it below midnight opening price? And is it below the weekly open? And odds are it's probably going to try and get out of there. So if price tomorrow is still below here, I would speculate, as an educated guess, if price is still here by NFP, shoots up, something like that. I would hope for that because I want bullish price action to come into play and not take out a swing low. If not, price will probably trend back up here. By the time Friday comes, NFP, and then another drop down. And then we'll see that going into next week as well. Just to cross-reference, to look at the DXY before we end this off. See, the DXY is pulling back. Why would the DXY pull back? It's probably trying to make a higher swing low. A lower swing high, correction. So this is a lower swing high here. This is a lower swing high here. And it's probably trying to go up, create a lower swing high to continue going lower. Because what did we recently do? We broke a swing low. And after breaking the swing low, we normally should suspect some type of retracement to occur in the marketplace. And that's what we're seeing here. That's why AU as well is pulling back. We're seeing the dollar most likely trying to create a swing high formation. I would like the swing high formation to form inside this last up close candle, the bearish order block. So price trade up into it and then run low. So making a high point here and then trading off. Whether that be next week, Monday, Tuesday, or even this Friday. I want to see a high point formed here, then goes lower. If not, price would shoot up for this swing high here. I wouldn't want to see price shoot up for this swing high, because I still want dollar to be bearish. So all in all, just to recap and bring it whole, because these videos are short, they're not supposed to be really long. If this swing low is broken, I would speculate price is probably going to continue going down, try and reach to the 20-day low, or any of these swing lows here. False break in the near future, and then we get that run back up for Australian dollar versus the US dollar. If not, like I said, if it comes down here, creates a lower swing high, runs into a breaker, and then it runs lower. That's what I would suspect. So, peace.